Alright, first time I shot this video, it did not go as planned. So today I was confused on the bias of my trade. I wasn't sure if we were bullish or if we were bearish. But what I should have been paying attention is, for one, we just filled this gap like crazy. So this weekly open gap, that was probably the draw for the week since we had this SMT up here with the 4 hour. You can see we had this SMT earlier this week. So this SMT's job was to reverse and to come take out these draws. What do? We took out basically most of this drawdown here. Now over here we took out at least, and I never even just pulled out the equilibrium tool. But yeah, we took at least 50% out and then some. So yeah, we retraced at least OTE of this range right here. I'm pretty sure. I just pulled from right here, there. But yeah, we smacked 61%. So yeah, we retraced pretty deep, so I could say that's a good time to start buying up institutionally. And then, so yo, another thing that you shouldn't have been confused about is we closed bullish. Like, we just closed bullish right here. So, if we just closed bullish and we just swept OTE, honestly, this looks like the trade to probably the entrance to probably take up the top of this external range. But I'm over here sitting like, I'm debating on if it's even going to be a decent run. Yo, it's probably the run I was waiting for, yo. I probably could have put real money on this if I was thinking. So, alright, so we closed bullish, so there shouldn't be much confusion. Now, the only thing that had me confused is that we didn't take out these PM sessions, but we already took them PM sessions out by, in Q. So with NQ taking out that, I'm thinking, alright, bearish SMT. But we just closed bullish. On top of that, we have a bullish SMT right here because this never took out the London. So what I should have been paying attention to is that we closed bullish, we just swept liquidity, and we had a 62% retracement after attacking that weekly open gap. Alright, we're not going to spend the whole week working on that weekly open gap. We filled enough orders. Alright, so on top of that, this is also, right here, this is the 12 o'clock line. That 12 o'clock line is also marking, that blue line is also an hour order block. So really, just off the hour order block right there, we could have entered. Smooth, crispy as hell at the 80s. The 80s. Or at the hundreds. Right there at the hundreds. Right there at the hundreds. Right on the corner at the hundreds. We could have entered. So yo, this really shouldn't have been that hard. You just fall in line with the bias, alright? I'm gonna start just falling in line with the bias. I'm gonna trade demo so hard for the next 3 months, yo. I'm actually just gonna get nice with it. I'm gonna stack up all my plasma money, and I'm gonna just pay my bills. It's only gonna take one trade for me to not be able to pay any of my bills or to be able to pay all of my fucking bills. And I already put all my money on the Taporia fight, and Taporia failed me, I'm not gonna lie. So really, you should have seen that. Alright, so we know that we're bullish because, alright, the bias, the SMT right here, the closing of the nature. So then really just, do we have any OTE 5-minute breaker structure? Because if I have a 5-minute breaker structure, it needs to be in the realm of OTE. I need to see that it swept liquidity. So we have this range from here. We already made this range. Now I kind of saw this 5-minute breaker structure. I was like, is this a short? Because I didn't know with the SMT, but we closed bullish, so I should have only been paying attention to bullish moves. Then we got this 5-minute breaker structure, bullish. Alright, but did we meet EQ of the range? No, we did not meet EQ. So I had no entry, alright? Then we pulled up over here, we took out the external range, then we came in, then we met EQ of the range. So when we swept out these lows, I should have been paying more attention. And I actually did take this long, but I was so drunk off of chocolate milk and waking up at 6 o'clock and donating my blood plasma that my ass just went to bed. So I closed the position. I was acting like if I had real money, because if you have real money, or if you're trading with real money, even if it's a small account, you're gonna trade a lot differently. And so that's, I've only tried to pass prop firms, but I think I'm only gonna try to trade live and get the money I need for the bills. And then I damn near made it. It's just a consistency at that point. So once we pull back into equilibrium right here, that's when I start to think, alright, maybe we could take a long up to some of these institutional levels. So you're trading in correspondence with the 4-hour bias. We've done SWEP, OT. You're trading in bias with the OTE bias as well. So when we get this 1 minute break of structure right here, where we're really supposed to get it, sweeping a low in equilibrium, post 5 minute break of structure. Boom. Boom, let's move this up a little bit. 343. So really the 1-to-1 is all you really need, but let's say you're trying to take this to an institutional level. Alright, so at a level. Alright, now what's up here that we can look at as a draw? Well, if this is a fib level, and this fib level is also aligned with the 20s, 50s. Well, the 20s are down here. These are the 20s, and that should have been all you should have been looking for. Because that would have been a good move. Alright. That's right when you need it. 345 plus 171 divided by 2, 3, 340, 342, 342. That's 1.5 to 1. That's high probability setup too. Dude, a 1 to a 1.5 is good if it's high probability. You're trading in the directional bias with the higher time frame. Quit playing. Get your money up, not your funny up. Just pay attention to the 4-hour directional bias. Ask yourself, alright, where do I want to, even if you're wrong for the day, pick, alright, I think it's bullish or I think it's bearish. Don't make a big fucking deal out of it. If I think this is bullish, then where do I think it's going to go? Alright, so let's look at the hourly draws. Where do we think that this is going to draw on an hourly perspective? Alright, we're probably going to take out this right here. We already know we're going to take that out. Boom. Alright, if we're going to take this out and we're already up here, that's probably the best place, honestly. I like where I've used the fib level, but I'd also like to utilize the fib on just this 5 minute range as well, because then we can line that up. So we could either take it at the 20s or we could have took it up here, which this one is closer to the 50s. So, and if we would have held it to the 50s, we would have made it by, yeah, that PM. So 20s or 50s. I say the 20s just because it's right there. It got smacked sooner, and it's a decent amount of bread in your pocket for a high probability setup. But yo, just focus on the 4-hour bias, bro. Just fall in line with it. Figure out where's the draw then. Alright, and then if you're confused, just don't do anything. But don't let bullshit confuse you, and pay attention to all the detail. Don't let one SMT confuse you when there's another SMT that's actually in correspondence with the 4-hour directional bias. Alright.